There's a little known secret when it comes to having your insurance policy within your super fund. Some super funds, they don't pass on the tax benefit that paying the premiums through your super fund provides. So what do I mean? If you've got $1,000 insurance policy paid through your super fund, you actually get a 15% tax rebate on that policy. So what that means, that $1,000 policy, you'll get $150 back into your superannuation account every year from the ATO as a tax refund. Now, what some super funds do is they don't pass on that tax rebate back to each individual member. They will withhold that money. So I'll give you an example. We've got Legal Super. Now, Legal Super are looking after the legal fraternity. They're working in their members' best interest. And in fact, what's even more impressive is on their website, they are award-winning insurance cover for default cover. As the time of recording, and we're in January 2024, and they've been awarded the winner. I don't get how that works, but sure. 2024 award winners for default insurance cover. Amazing. How good is that? Why would we not want to get our insurance policy through an award-winning default insurance provider? However, at the end of last year, Legal Super provided a significant events notice. Now, anytime they make any changes to your super fund, almost every super member ignores these letters or emails about a significant event. But one thing that they did mention here is the tax rebate on insurance premiums is changing. If you have an insurance through your legal superannuation account from the 1st of January 2024, the 15% tax rebate on insurance premiums will no longer be applied to your account and will be retained in the fund to pay for the administration of your account. So what that means is Legal Super no longer will pass on that 15% tax rebate back to each member. They withhold the money. So again, if you're paying that $1,000 premium, in the past, $150 got credited back to your account. Or in reality, what happened is they would just take $850 out of your account to pay the premiums. But moving forward, now $1,000 will be taken out of the account because Legal Super will be withholding that 15% tax rebate. Now, some super funds in their PDS, they talk about how this structure makes it more affordable for future insurance premiums. And so sometimes you may think, well, Legal Super, they're insuring many people. Surely they've got that buying power to go to insurance companies and get a cheaper premium overall. So withholding that 15% tax rebate, it's not too bad. Well, let me tell you, that's actually not true. The insurance provider with Legal Super is Zurich, Australia. So one of the biggest insurance companies in Australia, actually one of the biggest insurance companies in the world. And so I've compared going through Zurich, through a financial advisor to get a policy versus going to the award-winning Legal Super insurance provider. So in this scenario, I've done someone my age, 37-year-old male, earning $100,000 and just chosen a qualified accountant. $1 million of life insurance, $1 million of TPD and income protection to cover that income of $100,000. Now, Legal Super, they will only allow a maximum benefit period on income protection of 2 years. So they actually don't allow a long-term benefit period, which I personally am a big fan of. We do a lot here at Skye, but that's the options that we have with Legal Super. So we want to make sure I'm comparing apples with apples. So the premiums via Zurich through a financial advisor is $924 per year versus Legal Super option with the same cover, it's $1,400 per year. So not only are they keeping that 15% tax, it's more expensive even at a base level. So I've got that quote through Zurich so you can see what that looks like. Here's the premiums overall. The total premium, as you can see here, is $1,054. So this is a great example of that tax rebate and how it works. However, the net premium is actually $895 per year. And the difference between these two numbers is exactly that 15% tax rebate. So for any of those engineers watching at home who said, hold on, Phil, you told me in your quote comparison it was $925 per year, and now you've gone to Zurich and it's cheaper. Great job picking up that difference. The reason for it is sometimes our quote comparison versus what we quote with the insurer directly can be a little bit off. And the reason for this is Zurich offer Skye Wealth an extra discount for our clients. That's why it is even more cheaper going through Zurich through a financial advisor. As you can see through this quote comparison, the difference between having a policy through Legal Super, which is ultimately the insurance provider is Zurich, versus going through a financial advisor and getting that policy set up can be pretty significant. And this is well before they started started taking your 15% tax rebate and withholding that money for themselves. And the other thing to note is you can set up this policy with Zurich through a financial advisor and still get legal super to pay the premiums. Effectively, you're going to be paying $400 a year less if you go through a financial advisor versus getting the equivalent policy directly through legal super. If you do end up leaving legal super, you can actually take your insurance policy with you if you've set it up through a financial advisor this way. So the other big takeaway is just because something is an award winner for being the best default insurance provider in the market, maybe it's not because they're the most affordable or the best policy. So if you do have any questions about whether your super fund is withholding this tax benefit, or if your insurance policies you've got set up at the moment is appropriate and is reasonably set up, feel free to reach out. Happy to help you out.